All right, good morning, everybody. So as we typically do, first thing in the morning, want to check the market watch. Top of your screen, go to market watch, next menu down, go to calendar. If your calendar looks like this, just uncheck the show all, turn on Econo Day event. You can rearrange these columns, and I like to just move this one over so that I can see the time right next to the description. Makes it a little easier to kind of see what's going on. These events offer an opportunity through the day to reshape our market. So we always want to have an idea if there's anything on the books that could do such a thing. 8:30, 8:55, 11, and 1. This speech, there was one yesterday. You always want to kind of make sure you know what it is, right? He's not going to come out with new policies or game-changing information during some crap luncheon at a college somewhere, right? He doesn't make policy. He doesn't make policy anyways, but he certainly wouldn't propose policy at one of these events, right? And you can see that this one, he's at a virtual conference, and it's likely that they're going to ask him questions afterwards. That's where things could go sideways, right? Not the luncheon itself. He's very likely going to, read some prepared remarks, and it's going to fit the agenda of whatever event he's at. It's after that, when they're asking him questions, that's the potential for him to go off script and perhaps say something that could rock the market, right? And so we always want to kind of know that he's talking, but it's not like an FOMC meeting or something like that. He won't be announcing any kind of changes to the system, nothing about tapering interest rates. He wouldn't propose or announce policy in this situation. Same thing with yesterday's too, So we do want to know that he's talking, but for the most part, the speech itself isn't the issue. It's after he's done with the speech. For the red book, it's so close to 9 o'clock that it wouldn't even matter. We'll just say that it's 9 o'clock. The PPI, the red book, and then we have additional auctions at 11 and 1. Be very careful with these auctions, right? They can take a sideways market and turn it into a trend day, or they can just flat out kill a trend day. And, the sneaky thing about the auctions are that normally at lunch, we don't expect a market to move. We expect it to go into a lunchtime range. And yet on these auction days, it absolutely can, especially this 1 o'clock. When we come out of lunch, we just start trending, and then 1 o'clock hits, and that could just shut down that trend right there, right? So be aware of them. Just recognize that the clock is one of your greatest assets, and keeping your eye on the clock through the day is really going to help you out. 30-minute ES chart. You can see we've topped out. Now, like I was discussing yesterday, after the amazing move that we had in the last few days, it is not unheard of that we're going to have to pull back and stay sideways a little bit, right? When you kind of think about the scope and the size of that move up off of those lows, it's a spectacular move, right? And we're halfway to 100% of this cup. Now, as with everything, head and shoulders, cup and handles, everything can be measured. Well, when you have a little cup, or maybe even a V shape, you could even say a head and shoulders, right? Well, how do you measure a head and shoulders and project the move? You take it from the bottom to the top, and then you stick that up there, right? So if we were just to draw a line there to there, and then we'd copy that line and set it up there, and we'd say, well, how far is this thing projected to move? That's a pretty close approximation of the target from that head and shoulders. Well, I just used this little drawing tool that they have now. quadrant lines, measured from the top to the bottom, and it gave me 200%, which is, another 100 above the 100 I already had. We're halfway to that target, right? And if we're halfway to that target, we would expect to slow down, to take a little bit of a pause. Markets move in a wave. Always. They always move in a wave. And when we're at the top of the wave, it is very likely that we need to pause there and let the market get caught up a little bit before we do something else. Right? That makes perfect sense. So we're not bearish, by all means. Don't let those bobbing heads on TV convince you that the world is burning and that you should be short and that we're going to crash at any moment. There's always things that could topple our market. Always. 9 times out of 10, it won't be something that we already know about. It will be something that we have no idea is coming at us until it gets us. It'll be one of those things. And until one of those things come and actually get us, trade what we have. Don't trade what you think we're going to get. So here's our range right now. We are sitting inside of Monday's price action. Monday was sitting inside of Friday's price action. And the thing about markets is they're a living, breathing thing. And there's nothing in nature that you can contain without letting energy out. If you don't let energy out and it just builds and builds it's liable to explode, right? We set the tone Friday. We stayed inside of it Monday. We're still inside of it right now. This is holding that range and just building up energy. It's just winding up like one of those old crank clocks. It's just winding and winding and winding and winding up energy. Eventually, it's going to blow that energy out. Now, there's no promise of direction, but inherently, a market wants to go up, and unless it has a reason not to, that's where it's going to go. For the time being, just keep your eye on the ball and recognize that we're in a range. Play the range. There's nothing wrong with trading in a range-bound market. But if you find that you're losing more often than you win and that it's difficult, then just stand aside. Go do something else. Go trade something else. Otherwise, you're very likely going to see a very muted range-bound day. We're going to maintain inside of this unless the news kicks us out of it. So a move to the upside, we would first reclaim yesterday's pivot point at around 47. There is a COG at 47.11, which is higher than yesterday's highest point. A 1% move would put us around 47.37. That'd be our projected high for the day. And a 1% move to the downside would put us right around 44, 42. So that's our high and low for the day. If we do break to the downside, a 1% move is not out of line. There is no support here. So if we do break below that gray line, then we are most definitely going to 42.25 like I spoke about yesterday. There's nothing there to hold it up. There's no support of any kind through that area. To get there, however, there are plenty of things that we can bump against, just like hitting branches when you fall out of the tree, right? You're going to hit everything on the way down. We would tag and react at every one of those pivot points on the way down until we get to that 46.50-ish area, right? The low of this price shelf. It's unlikely that we're going to see either one of these today without some extraneous news pushing us in that direction. It will be extreme. You got to remember that 12 hours of the day are already done. So if we're going to make a 1% move from our current location, which is flat, if we're going to move a 1% from here, it will be across the board something that is in your face. The sectors, advanced decline, cumulative tick, everything out there will be screaming go short or go long if we're going to be hitting the edges today, right, on either side. If not, then it's very likely that we're just going to keep bouncing around mid-range. Or the NASDAQ, same thing, mid-range, still holding the range. We haven't done anything. We are up, less than a quarter, but we are up here in the NASDAQ. Everything that I talked about in the ES matches here perfectly. That we've got yesterday's high and low, Globex today high and low, range-bound market, very likely going to remain range-bound, and that if we do start pushing to the upside, then we've got this high from Friday to deal with, and if we do start pushing to the downside, then we have Sunday's drop to deal with. Beyond that, the 6,200 is our line in the sand to the downside. Should we get below that, there is a little bit of help here at around 150, and then we would have open skies all the way down at 15,600. To the upside, we would need to resolve yesterday's high, and we can basically run fibs past that. But I would be looking first for around 6.5 and then 6.6. And that would be our trading day in the NASDAQ. Again, it's unlikely to see anything like that without that news, right? It's going to take something. And the news could be nothing more than the dollar and the bonds. Remember that either one of these, the dollar or the bonds, could completely reshape our market. Right? And you can see we've had a little bit of playing around here in the dollar this morning. It has been making some moves. These products are often what move our market 100%. When you're looking at, the NASDAQ and you're asking, why is this thing moving? Very likely it's because of something in the bonds or something in the dollar. When we're trying to figure out, why are the institutions buying this? Why are they selling this? Where is it going? What's making it move? The dollar and the bonds, and or the bonds. Sometimes it is one, sometimes it is the other, sometimes it is both. There is no always in the market. You can see right now that we're kind of starting to correlate it a little bit. So in the last week or two, we've been very bifurcated. That'd be like a day, the Russell's doing really good and everything else is a turd. Or the NASDAQ is doing really good and everything else is a turd. Really bifurcated markets. A bifurcated market is a safe market. It's when everything syncs up that things can get really wild and crazy, both to the upside and or the downside. And you can see right now that all four of our markets, the Dow, the Russell, the S&P, and the NASDAQ, they're all showing this little curve, this little rollover, and they're all dropping right now at exactly the same way. That's not a bad thing. That's just pure up correlation, right? That they're all doing the same thing. Now, what I like to do when I'm running this 4 grid is, since they're all giving me the same setup, the same pattern, the same example, then I want to look to see, well, where's their support line? And do they all have the same support line? Not the same location, right? Maybe one's got 3 waves, one's got 2 waves, maybe one's got 4 waves. But where is it at? Does it have the same shape? And you can see, yes, it does. They all 4 have that, right? A lot of times, since we've been bifurcated, they don't have that same setup. They don't have something that I can compare to. The Russell just hit support. Did the S&P? Very close, yes. Did the NASDAQ? No, it's in the middle of nowhere, a long ways away from its support. Did the Dow? Yes. All right, so if I was able to say yes to all 4 of those, then I could say that the entire index, all 4 of the indexes, all found support. But we can't say that because the NASDAQ didn't find support. But there's a lot of ways to use this grid, and that's one thing that I like to do, is not just ask the question, well, are they all red or are they all green? Are they all moving up? Are they all moving down? Not necessarily just that. It's, what pattern are they giving me? What shape are they giving me? Are they all giving the same shape? Notice we're getting this move down in the bonds, and the VIX really haven't started to do anything yet. They're peeking out, like thinking about making a little bit of a move here. But as extreme as that move may feel, the VIX hasn't responded yet. And this is exactly what I'm talking about when I say use the VIX to confirm. If I was thinking of going short, that this was a convincing piece of price action, and I was thinking, yeah, I'm going to go short. This looks like we're going to actually go somewhere. Are we? Or are we very likely just to find that support and pause there? Now, it's very likely that we do continue to go, but if we were, you would think we'd see some kind of confirmation here in the VIX. And instead, we've got this controlling candle here, and we're still inside that range. We haven't done anything. Haven't gone anywhere. This thing isn't bid up. It'd be the same thing if we were to make moves to the upside. Exaggerated extreme swings with a breakup candle instead of a breakdown candle. We would expect to see the VIX go lower. There's a big gap up in the VIX, huh? Now it's waking up just a little bit. These are some of the greatest indicators that you can put on your chart. Price action, right? I'm sure you've heard that before. The best thing you could ever use to trade is price action. It's the best indicator you got. Keep your eye on the dollar. Keep your eye on the bonds. Keep your eye on the clock. The clock is one of your assets. All right, so the EV market, really green this morning again. Crypto, again, very green, very exaggerated in its movements. We've got, 2.5%, 5%, 7.5% moves in here in the pre-market. The chip sector, okay, yeah, the chip sector is a little weak. It's still not too bad, but it's a little bit weak. There was some good news on AMD yesterday that really galvanized this thing and kicked it into gear. And we went after SMH to kind of play that game. I think there was another ETF, a chip sector ETF that we went after rather than trying to jump into AMD because it had already moved so far so fast. But chip names, crypto, EV, pot's not looking too good this morning. I mean, we got one massive monster blowout name, but the rest of them are kind of flat to negative. So not looking at a whole lot of love there on the pot. Another way we could kind of approach this, though, is what sectors are moving around this morning, and maybe that can point us in the right direction. All right, so the airlines are finally taking a breather, and finance is down this morning. Finance is usually tied very closely to energy, so it's odd to see energy up and finance down. One of these are going to be resolved, right? Either energy comes back around and starts moving with finance, or finance turns around and starts moving with energy. But one side is up and the other side is down, and they've been moving correlated pairs through the year. So one of those are likely to change. EEM, what I use for emerging markets to monitor a risk on behavior, is negative this morning, implying that there is no risk on behavior at this point. Doesn't mean that there couldn't be, just that there isn't right now. Tech is barely up, and then utilities, right? So the sectors are as flat as our indexes. On a day like this, it is very likely that you want to play stock pickers and do not lean on the sectors or even the names in the sectors to point you in the right direction. You're going to want to fire up your scanners and use those to find your opportunities rather than, going down the rabbit hole and looking at looking at the sector name and then trading the companies that are in that sector. Energy is one of the names that are up slightly this morning. You can see the names that are in there that are causing it to be bid up a little bit. ConocoPhillips, Schlumberger, right? ExxonMobil, Chevron. ExxonMobil's got quite a bit of activity, while other names just have like one transaction, right? If you look at Valero, there's like one single print, and that was it. I don't think it's going to be a day to use the indexes like that, right? To use the sectors. You're really going to want to just lean on your scanners. That's what I got for you guys. Be careful, be safe, have a good trading day, and I will see all of you tomorrow.